Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the December 10th stock market wrap up. First of all, I want to admit that today was a pretty boring day. I missed most of normally I come in around midday and I watch the market from around then to the close, but today I was very busy with errands, so didn't get to see anything until I came back. And when I saw initially that the market was up, I thought I was going to have, oh, great, some nice charts to look at, hopefully in the longs, hopefully get a little bit going. And then when I check out my scans, I notice at the end of the day, there's only one and two stocks in my two scans. I had a total of three stocks in two scans. One was an ETF. So two stocks in two scans on a 1% up day for the S&P 500, and a 1.2% update for the NASDAQ. So it was very disappointing to see that. And then whenever I saw that there were more shorts and including a new short to go along with that, made me realize that today's bullish session was indeed bearish underneath. But not a lot of people are going to tell you that because the S&P 600 was up 2.3%. Too bad it failed right at the 50-day moving average, just like the Russell 2000 has, just like the NASDAQ has, or it's actually right there. It hasn't failed yet, but it's right at the 50-day moving average, and all of these indexes are hinting that it may not want to go over. The trend is up. Gold has been looking strong, silver, platinum. Telecom stocks look like they may be bottoming. We've been having leaderships in transportation, airlines. Bank stocks, small bank stocks are back up there on the list, but overall, there are still bad things happening out there, and included in that was a recent new long that we cut yesterday and another new long that we had to fully cut again today. Now, luckily, both of those longs we've already taken partial gains on before our full cut loss, but the fact that we are even getting a few nice setups and those nice setups are then getting trashed completely tells me that we are not anywhere near a bottom. So I'm sorry until I see more evidence in leading stocks and in volume on the indexes. As you can see, once again, we're starting now to lose volume on the upside. As we go along, since the November lows, volume is tapering off. Same with the NASDAQ. You can see volume's falling off, and since the October lows that then led to the new November lows, volume's getting lower and lower. This does not make a bullish market. And whenever you have new longs with nice chart patterns fail immediately, that is a huge red flag to me to watch out for even any new long potential candidates that even come up. So we'll go ahead and just realize that the market's in a short-term uptrend, sub-intermediate term consolidation area, basically from the October low area. It's in a downtrend still, but it's in a range still, kind of. I guess you could say it's a little bit better on the S&P 500 or the Dow Jones Industrial Average. I'm sorry. Here it kind of shows the consolidation area a little bit tighter here. Use the support lines like right around here and right here to show you where the market's. Sorry about that. I just hit my other keyboard. And about right there. So you see in this little area right here, the market's in this trading range right here, and until it busts out of it, I really can't see going long stocks or going short stocks heavily. I continue to be heavily into cash. I got a new short tonight, but I can't put a ton of money into it because it's a risky, semi-volatile short, and it just isn't worth making those kind of risk in a market that is completely trashing possible longs and not shorts. Thank God. Most of the shorts that are failing are barely failing, and then they go off to be working right away. If CHD would not have suckered me out on that short abbreviated session on Friday, we would have a very heavily positioned 9% gain in this stock. Sadly, that Friday did shake me out, and it's just a testament to how hard it is to maneuver in this market. A good market, down and up, should not shake you out. You should not get shaken out of a stock. And the fact that CHD set up a near-perfect short pattern, failed it 2 days later, and now is right back and is working perfectly as a short, down 13% since then, tells me that it's harder than what it looks out here to make a lot of money in the stock market very easily. So anybody that thinks it's going to be easy to make money before the end of the year is just, fooling themselves. I don't want to post the stock. I just fully had to sell because it didn't work. But let's post one that I did not go long that didn't work. Here's one. I know some people bought HTS on 1125, saying that it broke out of they called it a cup pattern, the people that I talked to, but obviously this is a horrible cup pattern. But anyway, I could understand why they went long. They went long at 24.15, and by 12.8, it was looking like a good move. However, the very next day, that's it. All the gains are gone. Destroyed. Everything on heavier volume. That kind of action right there is kind of what happened in my long personally today. And it just shows a market that just isn't completely healthy. As you see, it kind of rebounds today. But the fact that it even broke on 12.9 is the problem. If to even have a day like 12.10 today on strong volume, Bob not even going back to max green or towards max green, is ruined by the fact that 12.9 happened anyway. So the market's really in a state of, I guess, still shock from the bear market that we just came from. So things aren't setting up right at all, and they continue to fail left and right. And I want to take a look at long that I went long in October. Yeah, and it's still not working at all either. So it just isn't working right now. It's just going to take more time, bottom line. We're going to need to see more stocks like this to work on bases before we can really consider going long the market. I want to show you some commodities. Oil was up 3%, almost confirming still that my $40 low is going to hold. The low of the day was hit at 40.81, and since then it has been up. And in 3 days, it's up 6% since that low. Still, I would not be going long oil, but I would not be thinking it's going to go to 30 either. It looks like it's a little extended to the downside, and I can't see too much more gains coming from this. This is an arithmetic weekly I've pulled up here, and as you can see, it just came down way too much, too fast. Now, those of you that want to buy silver, you now have a reason to, as it's above the 50-day moving average. Those of you that want to buy platinum still don't have the let's go small long signal yet. And those that want to buy gold, I would say that this move here is worth a long position. Why? Because to me, it looks like it's on the short term making higher lows and making higher highs for a little bit. I know it's kind of hard to see with the white line, but it's a flag pattern kind of going up. It's not a real flag pattern because it's coming from a downtrend. So anybody that ever tells you a cup with handle flag pattern type base, blah, 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 saucer, handle, saucer, double bottom pattern came from downtrend, they're all wrong. You need 20% previous uptrend. So this isn't legit, but this is a commodity, and they work better off support than they do on breakouts most of the time. But recently they've been momentum plays. And as you can see on a 2-day, 3-day, 4-day, it's tightening up. It's in an uptrend. It's above the 50-day moving average. And I would think that it would be safe to go long a little gold here. I'm not, but I'm just saying gold doesn't look like it's going to go lower on the short term. And I want to take a look at one silver stock that was very bullish today just to show you how the commodities of silver, gold, and platinum seem to be getting play. And I hope that doesn't mean that the death of the dollar is now upon us, but it's holding the 50-day moving average. It's still holding that flaggish pennant-like formation that I drew from the November to December period after the November flag pattern breakout. And so it isn't bad yet, but at the same time, with the way gold and silver and platinum is moving, I hope this isn't the beginning of the death of the dollar. But we'll see in time. Not much happened today, not much changed. The only thing that was really noticeable is that the VIX dropped to 55.53, which was a recent closing low going back till November. So this was a new closing low for the month of December. Market doesn't look that great. Still looks pretty nasty to me. It's still in a very hard downtrend. I'm a long-term player, and we've been warning you about this market since early 2007, whenever it started to sell off in February to March. But since it rallied back and we had great longs like AFSI and Testo, no reason to bail out. The rally from September to November, we had FSLR, DRYS, APPY, and so many more you can look up. By October, that's whenever leading stocks quit leading and started to break down, and that's when I told you Market's done. Market's done, everyone. Sell your mutual funds. I told you all to sell your mutual funds of November 2007. Sadly, the Street.com got a hold of me in 2008 as a guest contributor, and I left before I could really, really gloat and bloviate on how great my shorts did, since one of the very first articles that I wrote was how that the leading tech horsemen are all going lower this year. I got a lot of hate mail on that, by the way, folks, and I nailed that one correctly right, just like I did whenever that lovely, lovely, nice, kind woman decided to tell me in March that bank stocks bottomed, that nobody should listen to me because I'm wrong. Lady, as it's been obvious, I haven't been wrong since 1998, and I believe that that will continue to be the case until the day that I die. God bless everyone out there. Stay positive. Stick with the market. I know that we had a bit of a weird day today, but we'll be back tomorrow. Aloha.